People are now financing their groceries. Now, you're probably thinking, well, we've had credit cards for decades, and people have been paying for their groceries on credit cards for forever. Like, what's changed? Well, there's this new thing, and when I say new, I mean it's been out a few years. It's been around for a while, but it's this whole buy now, pay later thing where you make a purchase and then you run it through this provider, this payment processor, and then they break your payment, they break the purchase charge up into like three equal payments or four equal payments, something like that. And then you make the payments over the next, one each week or once every couple weeks or whatever. But it's a short-term loan. It's like a payday loan, except you're able to just make the purchase right at the point of purchase, like with your phone, with an app on your phone or online, like from a computer. You don't need the cash. Like with payday loans, you actually have to go into their location. You have to get the cash, or you have to go and get the loan online. This just kind of reduces that friction. You download the app and then you're able to make purchases from it, and it breaks it up. Now, there's a number of problems with this, but the fact that we're talking about making purchases for groceries on a loan, this highlights a very specific problem that I want to talk about in this video. Now, in where I'm getting this information from, it's all over, but this specific article comes from the New York Times, and it says, consumers are financing their groceries. What does it say about the economy? Well, it doesn't say anything good, I can tell you that. But the article starts off with an example from this woman who bought her groceries, and the bill was nearly $400. And so she just paid with her Klarna app, spelled Klarna, Klarna. This is not an advertisement for Klarna by any means, no way. But they're one of the big ones. And so she made her $400 purchase, and then it split the payments up into four installments of $100 each. And what I found so fascinating about this was what she had to say about this. I'm going to quote from this article. She says, food prices have skyrocketed. She said she plans how much she'll spend on each trip to the grocery store based on her cash flow and other expenses that month, including credit card debt and student loans. Being able to spread out the payments for groceries has helped her family of four, soon to be five, budget better. Do you hear that? Do you hear what she said? She says that being able to spread out the payments for her groceries has allowed her to budget better. This is harsh. I don't think this woman has a clear understanding of what the word budget means. Budgeting is not figuring out how to buy stuff that you don't have money for. At no point in this article, as they interview her and talk about her, at no point do I hear any indication that this woman has thought to herself, I may need to adjust my expectations, or I may need to adjust my lifestyle, or I may need to make cuts to my consumption based on my cash flow. No, instead, she's using an app that allows her to make purchases that circumvent her cash flow. She doesn't have any money now, but she's banking on having money come in. I think that's what she means by cash flow. Cash flow meaning future money that's going to come in from work. This whole mindset is just baffling to me. This is completely upside down. Absolutely upside down. When you don't have the money for something, you don't buy it. You don't purchase something today that you intend to get the money for next week. It needs to be the other way around. The money you spend today needs to be money that you earned last week. You see, you need to come at it from the other direction. Instead of constantly playing catch up, you need to have money built up that you're spending down the road. So you're taking money that you're earning now, your cash flow now, you're setting aside and spending it next week. Now, I know what people are going to say. Well, you've got to eat. Like you can't starve, right? I get that. You can't starve because, if you starve to death, what's the point, right? Like game over, right? But but you need to get realistic about expectations and what you assume to be necessary. There's somebody else that they interviewed in this article. I want to highlight this. This is a guy that they interviewed, and he said, quote, I've used the loans for groceries and even to pay my phone bill. Even to pay his phone bill. Now, think about that. His phone bill is a monthly expense. So that is a recurring charge that he is paying each month, and he's financing a recurring pay. So he is making his phone payment every week? This is just lunacy. He says, I've used the loans for groceries and even to pay my phone bill. He said the loans allowed him to manage his cash flow better. What is it with these people and their cash flow? I don't think they understand what that means. He says, when everything has gotten so expensive, groceries, gas, it makes my life easier to use these loans to buy my groceries or whatever else I need at that moment. I'm going to focus on that word need. This person has probably not really thought about what they actually need. I would say, this is going to be harsh. I would say if you are looking to buy some food, because we all got to eat, we've all got to eat, and you don't have enough money in your account to buy food, then first of all, your finances need a major overhaul. But more importantly, before that step, the first step before that step is to reevaluate what you determine you need. If you don't have money for food, you have reached a point where you basically need to cut back everything to the bare minimum, just enough to stay alive. You need to reduce your consumption to the point where you are barely maintaining existence. Because that's what it's going to take for you to climb out of this hole that you have dug for yourself. And that's what it is. It's a hole. If you don't have money to buy food that you need to eat today, you are in a massive hole and you've got to reevaluate what you need. Especially this guy who says he needs loans to buy the things that he needs. This is an epidemic. This is absolutely crazy. There's another stat in this article where they said that the industry, this buy now pay now, or buy now pay later. Yeah, buy now pay now. Buy now pay now. That's what you need. You need to do your budgeting where you buy now and you pay now. None of this pay later nonsense. Listen to this. In 2019, consumers in the United States bought about $2 billion worth of goods and services using the pay later loans. By 2023, so that's 4 years later, by 2023, that number had gone from 2 billion to 116 billion. People are tapping into these ridiculous buy now, pay later schemes to pay for stuff that they think they need. This is unsustainable. It's unsustainable for you as an individual. If you are caught up in this trap, and it is absolutely a trap. And I'll explain why. Because if you don't have the money to buy $400 worth of groceries, let's assume that you have to have $400 worth of groceries, right? Like that is the bare minimum for you to stay alive. So you have to spend $400 today. Okay, so you buy that on this buy now, pay later. So over the next 4 weeks, you're going to make 4 payments of $100. Okay, well, that food is a temporary purchase, meaning you consume it very quickly and then it's gone. So when that food is gone, you're going to have to replace it with more food. So buying that food is solving a temporary, it's a temporary fix to the problem of starving. Meaning, once you consume the food, you're just going to need more food after. Okay, so you don't have the $400. You make this purchase. Now you've got these payments. So now in 2 weeks, when you need to buy more food because the food you purchased previously is gone, well, now you have to make a purchase of another $400 purchase. Well, not only do you not have $400, but now you actually have $200 less than you had 2 weeks ago because you still have $200 of outstanding payments that are coming due in the next 2 weeks. So now you have a $400 purchase today. So now you've added $400 worth of payments on top of the $200. So now at the end of that day, now you owe $600. And in 2 weeks, when you need to buy $400 more worth of food, now do you see where it just balloons? It just balloons. This is madness. This is absolute madness, and it doesn't work. It absolutely does not work. You have got to cut back your consumption to where it's less than what you're bringing in, less than your cash flow. For these people that just love to talk about cash flow, your consumption has to be less at a bare minimum, not even counting the unforeseen expenses that are going to come up down the road. But even assuming that there are no unforeseen expenses, that you are just guaranteed that you're going to have this $400 charge for groceries. That's what it costs for you to stay alive, is $400 every 2 weeks. Well, then you need to have more than $400 every 2 weeks, because if you're bringing in less than 400, it's unsustainable. Like, my point here is that the solution to this is not about numbers. It doesn't matter whether it's $400, $4,000, or $20. It's not about the numbers. I think too often in finances, we get too caught up in the numbers. Oh, how much house can I afford? How much car can I afford? What monthly payment can I afford? Before you get to that point, the very first question you have to ask yourself is, what do I actually need? And I will promise you, I'll tell you, and I promise you, you actually need far less than you think you do. You don't need nearly as much as you think you do. We're going to talk about that in future videos. Thanks for watching.